Well, good morning, everyone. Don Cramer with the Cramer Group at Urban Nest Realty. Hope you're having an awesome Tuesday. Welcome to episode 105 of Coffee with Cramer and Colleen. Cheers to you out there today. My partner Colleen Schaefer sends her best. She can't make it. She has some appointments this morning, and I'm catching up with her with a couple of listing appointments this afternoon. So it's a fun, busy time in real estate. But I wanted to take a moment and shoot this episode and go over our September numbers so you have the latest and greatest as to how September wrapped up and how that's reflecting on our October housing market here in Las Vegas Valley. So we've got some slides to go over, and let's kind of dive in and take a look to see what's happening. Now let's take a look here at the first slide, and those are home sales for the month of September. And as you'll see, we bumped back up again nicely from the August number of 2910 to 3,273 homes sold. And as you can see, that is near the all-time highs, which occurred back in July at 3325, and then you have to almost look back a little over a year and a half ago to May of 2019 to see another month sales in the high 3,200 range. So 3,270 homes sold in the month of September is a very healthy number, especially also when we compare it against the 2019 number of 2,750. So very high demand in sales for the month of September, and a bump up from the month of August. We think a lot of that had to do with families that were trying to take some kind of vacation and wrap up the summer and get kids back into school. That was sort of taking place, so that kind of waned in the final couple of weeks of August. However, now that kids are being homeschooled and families and work from home, there's been a new surge in buying, especially with people thinking, okay, I do not have enough space. So that's why we saw a good, healthy number in the month of September. Now, if we move on to the median sales price, you'll notice another thing. So we also had a slight tick up there in the median sales price. So we're now at an all-time high of $337,500, up from the all-time highs of $335 from August, and then $330 in July. So we've been on this steady climb in our real estate market with regards to the median sales price. A lot of that due to the demand, low interest rates, and I think we're going to stay in this 330 price point range. Maybe we might see a little tick down or tick upwards, but probably from the low 330s to the high 330s, probably through the end of the year, and we'd like to see kind of how that plays out. I think that's because we're kind of approaching what I like to call the cruising altitude of our housing market, which is a good thing because we're going to have enough houses and available inventory for sale for people to choose from, and still with interest rates and other factors, still hopefully strong enough buyer demand to continue to sell that inventory over as we wrap up 2020. Now, if we look at, and some of that bears out here on the next slide, which is new listings. So you'll look at the month of September, we had 3,851 homes go onto the market, and that's down very slightly from the August number of 3,887. And as you can see, we've been in this sort of low 3,000 to high 3,000 range for now 5 months. And compared to last year, we were adding homes at a pace in the low to upper 4,000 range. So we're just not adding as much inventory as we did a year ago. A lot of that still has to do with COVID. People are a little concerned about listing their property, what they're going to do, things of that nature. We're still trying to figure it out. But the ones that are, we're just not putting quite as many homes on the market as we were doing a year ago last year. But that number, though, is still staying in check it's still just staying ahead of the demand numbers there. So again, another decent number of 3,851. And like I said, we've been in this low to upper 3,000 bandwidth with regards to homes going on the market for several months now. Now, if you couple that with the supply, that gives us a total homes for sale of 4,798. single family home listings for sale. And as you can see, we've sort of been in this upper 4,000 range, the low 5,000 range for about 4 months now, since about June. Now, we're probably, because we're not adding as much and going through the inventory as fast as we are, we're going to probably stay in that bandwidth as the way it's looking right now. So it's, while we're moving very fast and turning over the inventory quite quickly, and you're going to see that here on an upcoming slide, we're just staying ahead of that pace. And as you would see in the previous slide from a year ago, we had inventory in the upper 7,000 range, pushing almost 8,000 homes for sale. So we are certainly not at the inventory available homes for sale numbers as we were a year ago, and that's probably a good thing, keeping our market as strong as it is. Now, if we slide over here to month supply, again, that kind of shows that high turnover rate. We are at 1.5 months supply for the month of September, down slightly from the August number of 1.6. And as you look at it from a year ago, we were in that mid to high 2.7 range, almost pushing 3 months of home supply, which is still a good number from a typical housing market. But with the demand and homes moving in and out so quickly, we've been in this mid 45, about 45-day window with a 1.5 month supply of available inventory. So to give you a little context, is if we did not put another home on the market for the next 45 days, in theory, that our housing market supply would run out. That supply would disappear. Now, that's kind of unlikely because of price points, demands, things of that nature. But that gives you a really good context as to how homes are moving in this high-paced real estate market for both buyers and sellers. Now, also, too, that's reflective in the average days on market here, where we ticked downwards quite a bit to 36 days on market average versus the previous month of August, where we were ticking up a little bit to 43 days. So again, a lot of homes moving out, new homes moving in. Average days on market is more like our earlier spring numbers in April and May, with 36 days for the month of September. So again, it's still showing a very healthy, fast-moving real estate market. Now, we've got a couple other slides here where we like to kind of break things down by price point so you have an idea of what's going on in the different pricing tiers in the housing market. So we're going to throw the next slide up, which shows how many sales, listings, and active listings we have as we move up the price point range. So on the under 250,000, that's the entry level home price point. In the month of September, we had 390 sales. We had 374 new listings, and we have 499 active listings for sale. In our core real estate market, the 250 to 500,000 price point, as you can see, we had 2,362 homes sold. We have 2,810 new listings go onto the market, and we have a total inventory available for sale at the end of September of 3,365. Moving up to the next tier, you can see a fair drop-off of inventory available there in the 500,000 to 750 price point, where we have 358 closed sales. We have 543 new listings, and total listings available right now at 911. Moving up to that mid-luxury segment, as we like to call it, that's the $750 to $1 million price point. We had 90 closed sales. We had 147 new listings, and we had 341 homes available for sale at the end of September. Now, we've broken out the luxury market into a couple of price points. Those homes from $1 to $2 million, and those homes in excess of $2 million. Now, if you look at those, the $1 million to $2 million price point, we had 66 homes sold. We have 100 new listings, and we have inventory of 291 homes in the $1 million to $2 million price point. And finally, those priced over $2 million, we had 19 sales in the month of September. We had 40 new properties come onto the market, and we have a total inventory available for sale going into October with 229 listings. So as you can see, housing market's still staying pretty healthy, and we're just staying up for the most part across all ranges as well. So again, we're just adding enough inventory to stay ahead of supply, but things are moving still quite quickly. Now, the last couple slides, the one we're going to talk about next is the days on market. And this is kind of showing some interesting points with regards to that, breaking out the luxury segment. Now, in the under 250,000 price point range, we had 41 homes were on the market for 41 days. Now, the core segment, the 250 to 500,000 price point, we had homes on the market for 34 days. That's why that overall 36 days average on market is showing, because most of our inventory is in that price point. Then as you move up, 500,000 to 750 price point, we ticked up to 42 days on market. The mid-luxury, the $750 to $1 million price point, we ticked up to 52 days on market. And then in the $1 million to $2 million price point, we ticked up to an average days on market of 61 days. And then finally, those homes over $2 million, 131 days. So the interesting part to me is not only is the luxury segment moving well, it's really moving well in the $1 million to $2 million price point, because it's just a few days more than those homes priced at $750 to $1 million. That luxury segment is more of a traditional inventory timetable range, where over 2 million houses on the market now for 131 days. That's approximately about four months there. But even if you have a house in the 1 to 2 million range, the average days on market is right about 2 months of inventory, 2 months long, which is pretty darn good, all things considering. And then lastly, this is kind of a little bit of a forward indicator, and we pulled some traffic from our resource called Showing Time, which tracks number of showing requests over a 7-day moving average. And as you can see in the yellow gold line, that's representing 2020, and the blue line is representing 2019. And you can see the big dip there back in mid-March through mid-April with regards to COVID. However, when you look at the first week of October 2020, we're actually slightly ahead of search traffic average going into the month of October than we were in 2019, with a 7-day moving average since the beginning of the year up 21% versus a year ago where we were only up 19%. So what's that telling us is the housing market right now in the fall of 2020, from an activity standpoint and search demand, is looking at least like the 2019 numbers before the coronavirus pandemic. And that's kind of shown itself out too, because recently the governor's allowed us to do open houses, and we've seen strong buyer demand in open houses as people are coming in, whether or not that house is what they're looking to make an offer on, but they're coming in, meeting with real estate agents and looking at properties for sale. So even with the open houses now recently made available, there is yet another interest in demand beyond everyone that was just doing searching online. I think they wanted to get out and see some of the properties a little more so. And with the low interest rates, that's continuing to drive motivation in purchasing property. So that's the September numbers. So again, overall, very strong numbers in sales. Our interest rates are still driving a lot of this activity. There was a little bit offset, I think, from the month of August with regards to getting families with their children back into school, and now that homeschooling is taking shape, there is still a lot of demand and reconsideration as to what kind of home families are going to need going into 2021 and beyond, especially with COVID. Right now, we're going to probably be talking about that in some upcoming episodes. We don't think that the election is going to have a great impact on housing demand. We would probably have already started to see that as it stands right now. I think the interest rates are still showing the biggest effect. And also, too, our unemployment levels are continuing to drop. Are they anywhere where we really want them to be? No. But they are coming down from those early coronavirus pandemic highs. And as that continues to improve, that should continue to give us at least a good solid foundation moving into the rest of this year with regards to the housing market. So that's the September numbers. If you like what you're seeing and would like to pay attention to other updates, both in the real estate market, the lifestyle and community information here in Las Vegas, do us a big favor. Hit the subscribe button if you're on YouTube. If you have any comments about today's episode, love to hear those in the comments section, or also hit the like button too. That way you're keeping up with the latest and greatest as to what's going on in the little humble burg, as my good friend likes to call it, the Las Vegas Valley. So on behalf of my partner, Colleen Schaefer, thank you for tuning in to the September monthly housing recap. I'm Don Cramer. We both make up the Cramer Group at Urban Nest Realty, where more now than ever, your real estate experience matters. So give us a call if we can help you with buying, selling, or investing in Las Vegas real estate. Till next time, have a wonderful day. Take care. Bye-bye.